Hi everyone, welcome back to my YouTube channel. So in this video, I'm going to show you how to analyze an Airbnb arbitrage deal. So I'm going to disappear and it's going to be a full screen. Don't run away because we're just dealing with numbers. So it's easy for me to explain it on the full screen. Okay, the first things first is if you've got this far, assume you've made a decision on your location and guest profile. You've gone through the market research on Google search, Airbnb website, Booking.com website, AirDNA website, and also Wheelhouse website. You have looked for properties on Rightmove, Zoopla, OpenRent, On the Market, Facebook Marketplace, and Gumtree, all those websites which we discussed previously. On this phase, we are going to analyze the deal using an example in one of the properties in our portfolio. So this property is a 4-bedroom house targeted to holidaymakers and contractors. I will use this as a live example. So here we are actually crunching the numbers, going through everything that actually makes a deal. So also comment below, please send bonuses if you want me to send the spreadsheet to you. However, just be careful if you're not familiar with Microsoft Excel, because the formula links can break and that can make your numbers not true and mess up your deals. Because of this, in the next checkpoint, I will show you another method to analyze deals if Microsoft Excel is not your strongest point. So yeah, the top column, I've got the break even. The break even, this is where your occupancy rate has to be 40% for you to actually be able to pay your monthly operating expenses and for you to make money. The way I've broken down this spreadsheet is on top here, it's occupancy. This is like how many nights your property is booked per calendar month. So in 30 days, how many nights is it booked? So if it's booked for 12 nights, so it means your occupancy is 40%. All my deals, I usually use 40% as the break-even point. So if a deal doesn't work at 40%, if my net profit here is negative, so it means, well, if I don't reach 40%, I'll be paying out of my pocket. I won't do that deal. Average daily rates is the average nightly rate which you receive after commissions. So don't forget, if you list your properties on OTAs, which is online travel agents, these are the likes of Airbnb, Booking.com, Google Vacations, VRBO, they will charge a commission because that they are brokers. They are brokers. They make money from commissions. Airbnb charges about 16 or 17% commission, Booking.com the same, etc. So if you put your average daily rate, which is like the money you receive after commission, is going to be £130. So for this property, we receive £130 per night after commissions. The number of nights at 40% is 12 nights. If the property is actually booked for this 40%, I'll make sales revenue per month of 1,560. The rest is it's all formula calculated, and at 50%, 15 nights, you make 1,950. At 60%, you make 2,350. 70%, all that, So you can change these numbers. If your nightly rate is gonna be £100 after your OTAs, then obviously if it's booked 40%, you make 1,200. But for this example, this is a live property. This is actually what we currently charge, 130 nights. It goes up if it's 100% occupied. That's like 3,900. Yeah. So this is actually money coming into your bank account. Remember, I said we've got two accounts: account for money in and account for money out. So this is the account for money in. So the money will come in. Then the next one, these are monthly operating fixed costs. You can call them expenses, whatever you want to call them. But these, to me, I call them monthly operating fixed costs. No matter what, if the property is empty, full, whatever, I will still need to pay these expenses. The rent to the landlord for this type of property, we pay £1,000. There is council tax, like the tax is based on where you are. This varies, so your council tax can be higher or lower. But for this type of property, we pay 140. Besides council tax, you can also apply for business rates, which I won't go into in here, but it's the same as council tax, but for businesses. This example, we just use council tax, which is 140. Then for energy, which is electricity and gas, we pay 250 because energy bills went up. Water, £50. Broadband, we use super fast broadband. We pay £35 a month. There are other expenses, but because we've got a portfolio, so we don't pay these expenses per property. It's bulk payments. So there is channel manager, which is uplisting, which I use. There is monthly maintenance costs, which you can factor in. Netflix, you can put Netflix subscription, insurances, TV license, wheelhouse pricing tools, because these we pay them in bulk as part of our portfolio. So for this analysis, I didn't want to add them in. So you can see the total operating cost is going to be 1,475 all the way throughout. There's one cost which I didn't add here because it varies based on how many nights you booked, how many checkouts, etc. This is the cleaning charge. I don't put the cleaning charge here because the guests will pay the cleaning charge. So it's not like my expense. That's going to be the guest expense. The guest will pay that. You can see here, if the property is booked 40%, you'll make £85. But if the property is booked for 50% out of the 30 days, you make £475. If the property is booked for 60 nights, you make 865. This is your monthly profit. It stays in your bank as profit. 70%, you make 1,255, 165. There's 90%, 2,000, and 100%, there's 2,425. By the way, these are very, very conservative numbers because this varies. This average daily rate varies. So if it's weekends, you can charge more on the weekends. I've taken the one we charge Monday to Thursday, but like Friday and Saturday, our weekend prices are more because it's a weekend. We're probably charging for this property, we charge 160, 170 during the weekend. If this works at 40%, just know all this is profit. So this is profit, and this profit can be more. So it's not going to be, even if it's booked 100%, it's not going to be capped at 2,425 because you can have weekend bookings. If it's 100%, you've got weekend bookings already, so it's going to be more money for you. So these can actually go up to like even 3,000 because if you've got like an average of 150, so this can actually go to 3,000. This is profit. If your property is booked 100%, you can make £3,000 profit after paying the landlords, after paying the bills, electricity, etc. This is the power of Airbnb arbitrage. This is the power of service accommodation. But this is very important because it's a numbers game. A lot of people, especially when you're starting off, like if you can be breaking even at 60% and you decide to do the deal, to me, that's a bad deal because in the slower months, in winter months, that can come back and bite you. Also, once you've got your property, you start operating, there are other ways to get direct bookings. With the direct bookings, you don't have to pay commission. If on the OTAs, it's advertised as 150 and Airbnb is taking £20 and you're getting 130 a night, if it's a direct booking, you'll be getting the full 150. That's another avenue which you can maximize your profits. Okay, I've analyzed this, and one thing which obviously I also want to emphasize on the monthly operating expenses is the internet. Don't go cheap on the internet because that will reflect on your reviews. Other people like to pay for Netflix, but what we found out is each time we used to pay for the Netflix, but everyone has got a Netflix account. So people sign out to that one and sign in to their own Netflix. So I did a test and like, okay, I'm not going to pay for Netflix anymore. No one has ever asked for a Netflix password because everyone has got their own Netflix. Do not guess in terms of the energy bills. Don't guess it. Just make sure you can call energy companies and say, look, I've got a 4-bedroom property on such and such a postcode. There'll be about 6 people living there. How much is it going to be monthly electricity and gas? I'm looking to move in there. They can tell you, for this property, you're looking at paying around, well, it depends on usage, but they can give you an average. So if you don't just put like low prices to make the deal work, because that will bite you in the future. Just try put the exact amounts. If obviously also base it on where you currently live, how much electricity and gas are you paying? Because these are like fixed bills, which even if your property is empty, these will need to be paid no matter what. So you need to actually be 100% accurate on them, get them right. So there is also insurances here, because we pay the insurance for the portfolio. I didn't include it yet, but for your one property, you could be paying about 30 or 40 pounds on insurances, TV license, 10, 15 pounds, all these. So you can include them that. So even if we include these low numbers here, I'll still break even on this deal at 40%. There are other ways also to increase revenue because we are Airbnb portfolio business. So our main thing, we're selling sleep, we're selling beds. In terms of that, we're also selling experiences. You can actually increase revenue by other ways. For example, early check-ins and late checkouts. You can charge guests for that. If they want to check in early, you can ask them to pay extra money. If they want to check out late, you can ask them to pay an extra charge. And also other people include experiences. If you live in a holiday place and you can include these experiences and charge the money, that will increase your revenue. If they've booked with you, they already trust you and they'll be able to pay those kind of extra charges. And you can put those extra charges through the OTAs as other fees, etc. And OTAs won't take a commission on them, or they can pay direct to your Stripe account or bank account, whatever it is. But you actually made extra money on it. I will show you another way. No one has ever shown this way. No one teaches this, but I will show you. This is probably going to be the first YouTube video showing you this, how to calculate the deal using another method if you're not good at Excel. So I hope you enjoyed the analysis of this deal. And if you want to learn more about how to actually get your first property, your first Airbnb property, in the link in the description, I've got a community called 10-day Airbnb crash course. So this is a course which will help you get your first property deal. So if you want to take your life to another level and earn extra income as a business, not as a side hustle, just click on the link in the description, join the group. Also, please like, subscribe, and comment.